Welcome to Adventures in Real Estate Summer Podcast. I'm Dawn Isenhower with Sibcy Cline Realtors here with Gannon Craig. He is with Sibcy Cline Mortgage. He covers our Milford office and our Anderson office. Do you have any more offices
And
out
Hyde
there?
Park also.
And Hyde Park also. He's here to talk to us about lending, how things are going, and we've got some exciting mortgage programs here at Sibcy Cline they're exclusive and very, very interesting. So we're gonna have him talk about all that. But before we get into that, Gannon, what led you into this crazy world of lending? What caused you to be drawn to that?
Oh, well, thanks for having me, Dawn. I
You're
appreciate
welcome.
the invite.
Thanks for coming.
Yeah, so to answer that question, I was actually in the title business for 12 years up until the great mortgage collapse of 2008, 2009.
There you go.
And so in my time in the title business, I had experience with dealing with loan officers, from all different companies and whatnot. And as you might expect, ran into a lot of really good loan officers, people that really did a great job and handled customers very well and everything. But then, of course, I had some that weren't so great. And just, once, I got out of the business after the big collapse, when I came back into the business, I really felt like I wanted to be on the lending side just because I felt like I could do as good or better than so many of those people, just giving the customer an experience about, it's a tough process, as you know, going through and buying a house. There's a lot of things that people deal with for the first time when they're going through and buying a house. Mm-hmm. And so, being an educator of the process as you go through is important, and thought I could do a good job of that. So, yeah.
You're good with people.
Well, thank you.
That's the biggest obstacle, I think. So you also have to know your loan products when you're a loan officer. So what loan products do we have available through Sibcy Cline Mortgage, just to let everybody know?
Okay, well, yeah, pretty much all the main products that you would expect. We do conventional FHA, VA, so the USDA also. USDA and VA are two programs where you can have literally 0% down and still buy a house. And then FHA is a program that we do that you can put as little as 3.5% down. And then conventionally, we work with those programs where you can do 3% down if you're a qualified first-time home buyer. Other programs that we kind of tie in there, we do work with the Ohio Housing Finance Agency. So grants are available through there. And those can be used in conjunction with all the programs I just mentioned. So potentially you could get a USDA or VA loan if you're qualified for those loans and put 0% down and also get grant money from that Ohio Housing Finance Agency to help with closing costs, and maybe if you do have a small down payment on one of the other programs, it can go towards that as well. So we work with all those programs.
That's extremely helpful, especially to people who are coming through this process for the
Right,
first time.
right.
And they may not have a lot of cash saved up. Rent prices are crazy. I don't know how anyone saves up any money right now.
It's really hard to believe. My son is actually selling a house, not selling a house. He just moved to Nashville. I think I told you he moved to Nashville, and so he started renting his place in Covington, Kentucky, and it's amazing what rents are going for. He's blown away. He's been down in Nashville and had it rented out for X, and then lost his renter, and then came back, and he's like, I have to. It'd be crazy not to raise the rent,
right?
Because the market price for rents is just off the chain right now. It's just crazy.
Right. You want to keep up and
Yes,
get those great
of course,
renters. That's
of
for
course,
sure.
yeah.
So we have some special programs going on right now, and I've scanned through them, obviously, but it would be nice to hear some of these programs, what they are, and to get a brief explanation of what's available to people. You know how it is right now. People need everything that they can get. They need all the help they can get.
Absolutely. Well, the first one is called our Back to School Appreciation Program. And I think we came up with the idea because of it, obviously being back to school time, and so many teachers and that we know, and just administrators, different people, the expenses they have as employees of the school system.
I've been there.
When they go back and they have to do, decorate their room. My sister is actually an admin, and she spends so much of her own money. So we came up with an idea where between now, any application that goes live, meaning you go under contract between now and September 30th, they just get to save $300 in closing costs. They just get a $300, lender credit toward the closing costs.
That's nice.
So yeah, that's the first one, and that would be for anybody that's just a school employee. As long as you're getting paid as a school employee, you don't have to be a teacher, for instance, but any school employee. Nice. And then our second program is a rate watch guarantee. It also is for anyone that goes under contract between now and September 30th. And essentially all it is you get $500 off future closing costs if you're under contract with the purchase of a house now, and then you're refinancing as the rates, we hope the rates go down.
We hope they do.
Right. So from the contract purchase date and then moving forward, it has to be 8 months after or up to 24 months. So between 8 and 24 months after they buy the house, they, if they're refinancing in that period of time, then they would get $500 off their closing costs for the refinance.
Nice. And that's between now and September 30th
Right.
if they purchase.
Right. So it doesn't have to close before September 30th. They just have to be under
under
contract
contract.
before September 30th.
Very nice.
Yeah.
That's kind of forward thinking. They're thinking about the future
Sure.
there and getting their rates back down.
Sure. And just thinking about, yes, we all hope that the rates will be moving in that direction for sure.
We do. So Gannon is very rate conscious. He sends us information on the rates on a regular basis, which is very helpful. He'll break down the loan products by the rates that are showing. So what do you see? What are you thinking with regard to these rates?
Well, the short-term outlook probably is a little more bleak than the long-term. But as you may know, the Fed met this week, and they did bump the Fed funds rate a quarter, which likely will impact our rates. They expect more than likely that will get hit by another quarter up between now and the end of the year. They'll meet again in September and November, so they expect another bump. And this is all to try to get that inflation number back to 2%. Trying to, people are still, jobs are good, people are spending. So in order to get, supply and demand, in order to get inflation down, they're trying to just make it harder for people to borrow money. And it's as crazy as that sounds, that that's how they're trying to get what their goal is, to be at 2% inflation year over year, on any given month. So. Wouldn't be surprised to see something in the 7.5 or maybe even higher range between now and the end of the year. Fed funds rate predictions for 2024 and 2025 are right now it's between 5.25 and 5.5 is the range. They're talking about a whole point less than that, possibly in 2024, down in the mid fours, and then down in the mid threes in 2025. So light at the end of the tunnel. But it probably will get a little worse before it gets better.
And we do have to go through that pain.
Sure.
In order for us to get healed up and move on. And the funny thing is, last fall, it seems like when we kicked up over 7, everything just stalled out. And then the rates dropped under 7% and we got rolling again.
Right.
This time around, we've got some people putting the brakes on.
Right.
But other people are not putting on the brakes. They're just going to go ahead and deal with what comes. And I think it's good that loan officers like yourself, you're coming up with strategies for them instead of, saying you've got to be, 20% down conventional or else. You're really trying to look at them case by case and see what the best fit is for them with regard to rate, loan product, that sort of thing. So I think since the loan officers are doing that, saying, well, maybe go to FHA instead where the rate's a little bit lower, it's interesting to see that people are more comfortable knowing that they do have options and they're not stuck with a rate that's really high. So I know you've mentioned in the office meeting that you're looking at people, and this was a few months ago, you were looking at people more case by case just to see the perfect fit for them, since those conventional rates in particular are so high.
Absolutely, and the rates. There's a saying, marry the house, not the rate, and it's very true. So I'm not, just thinking forward for between myself and my fellow loan officers here at Sibcy Cline, we have lists and lists, spreadsheets of people that are potential buyers, people with good credit and people that are very frustrated at this point, with having not won contracts. They don't get their contract accepted over and over and they start becoming frustrated. Right. What I say to them is, as the rates do continue to go up, if they're still in a position to be able to afford the payment and they can still qualify for the loan, stay in the race, because there's going to be people that can't. And as they do go up, make sure that you're still out there and you're still trying to work with your realtor to find those houses, because that might be a little better environment for you as some people drop out because they either can't afford the payment or they can't qualify for the house anymore because of the rate going up and making the payment higher and making the ratios all of a sudden not work out so well.
True. So, and with the low inventory and buyers dropping out, it kind of brings more of a balance to everything. So that's very true.
Right.
just hang in there.
Hang in
is
there.
the name of the
I
game.
know it can be very frustrating. It's frustrating for all of us involved, but
That's the truth.
so it's a lot more work for everyone involved.
It is. I've had a lot of buyers this week just looking at things and considering things they never would
Sure.
before. I've had a couple of them in particular looking higher. And it's not that they can't go higher, they just didn't want to go
Sure,
higher, but
right.
now they're looking at that option because there's more inventory at that higher
right.
price point. So people are really trying to figure it out and make it work. And like you said, if they can do it,
Yeah.
and they need a roof over their head,
Yeah.
they probably should just go
Yeah.
ahead and do that.
And hope to refinance in a year and a half or a year or 2 years. And like I said, if you can afford it, look forward to a time when you'll get the rate that you maybe wanted later on down the road, and at least you'll be in the house.
Do you see adjustable rates taking off and becoming popular, or do you think people are just going to steer clear of those, to continue to steer clear of those?
It's
Any
possible.
thoughts?
It's possible. I think adjustable rates, when the mortgage collapse of 08, 09 happened, I think they took a bit of a hit, through the media. There were a lot of adjustable rates were attached to people that went into foreclosure because they skyrocketed. They've put measures in place to make sure that there's caps and whatnot on those programs now, so it shouldn't get too bad. But it is still risk because those still can go up. They just shouldn't go up to the extent that they did back then.
Oh my goodness!
But it's still, a lot of people aren't as comfortable with it as you might expect, and it's definitely something that some people might consider. It's another way to go to get temporarily a better rate to get into the house.
Very true.
Something to keep in mind on an adjustable rate. You generally are qualifying using what it could go up to. So it just because your rate's better, if you don't qualify, if you're one of those people that I was just mentioning that can't qualify because all of a sudden the rate's higher, it won't help those people because they're qualifying based on a higher rate than what the starting rate is on an adjustable rate. So it wouldn't help them, but it potentially could help someone that would qualify either way that just wants a lower rate.
Again, case by case,
Sure,
right?
right,
Right now,
right,
that's kind of the name of the game.
That's right.
That's true.
That's right.
So you've given us some words of wisdom already, but do you have any parting thoughts or any other words of wisdom concerning the world of lending right now, how things are? I think you've said just get out there and do it.
Stay in the race.
Hang in there.
Stay at it, because like I said, all of a sudden your competition may be different than it was last month or the month before. As the rates do continue to tweak up, people that were in it with you may not be in it, and all of a sudden you have less competition when you're trying to get your contract accepted. So.
That's very true. That's good advice. Well, thank you so much for being with us today. We really appreciate it. We're excited to have you here. And
I appreciate that.
If you have any questions about this topic or any other, you can contact me at 513-236-1254 or private message me. Gannon's available for questions as well. So thanks so much for joining us. Have a good one.
Thank you.
Bye.